if you can see my screen.
Good to go.
All right, so we have a ton to get through today. I have some examples and stuff, but I'm gonna kind of go over them quickly just because next week is actually calculations of pay, and that's what many of the examples are. So don't think that I'm just completely ignoring the actual calculation piece of it. It's just that we have limited time, so I'm gonna try and talk fast to get through all of this today, and then we'll go more in depth to the actual calculations next week. So yesterday we were talking about different types of employees, and we left off with temporary and leased employees. So sometimes employers don't want to actually hire the employees themselves until they know that they're going to work out, or maybe it's just a period where they need a bunch of people for a short period of time, so they decide to do temporary or leased employees instead of actually hiring them themselves. So just be aware that that can and does happen. PEOs are also getting pretty popular. A PEO is a professional employer organization. You will also hear CPEO, which is a certified PEO, which is a program that the IRS came out with a few years ago to certify PEOs. So those names are used quite often. And basically the employees in that case are the employees of the actual PEO and not of the employer. So the PEO is paying the employees, paying taxes, all of those things, and then they charge the employer for that service. So they're going to pay a fee to have that, and they're on top of the wages and the taxes and all of that good stuff. Okay. So as we talked about, misclassifying workers is a big deal, especially if you do it intentionally. So make sure that those three things we talked about yesterday, behavioral control, financial control, and relationship of the parties, make sure you're thinking of that as you're classifying your workers and making sure that you're classifying them correctly, whether they're actual W-2 employees or whether they're independent contractors. Again, it's more expensive to hire an employee than an independent contractor because you're paying tax on that employee, which makes it tempting to want to classify them as independent contractors, but be very careful because that can get you into big trouble. Fines associated with this, if you unintentionally misclassify an employee as an independent contractor, then the tax penalty is 1.5% of wages paid, and that penalty is doubled to 3% if there is no 1099 filed on that independent contractor. The employee's share of Social Security and Medicare penalty is nearly 20% of the employee's share of the tax. This is doubled to 40% if the employer failed to file the 1099s. Intentional misclassification of employees will leave the employer liable for the full amount of federal income tax that should have been withheld and 100% of the employee and employer share of Social Security and Medicare. So that's big. So make sure, again, doing your due diligence to make sure you're classifying your employees accurately. All right, independent contractors, if you do determine that you have a worker working for you that's going to be classified as an independent contractor, you always want to make sure you request a form W-9, which is a request for taxpayer identification number and certification. So this is just asking that independent contractor for either their business EIN or their Social Security number, depending on whether they're just an individual or whether they're actually a business. So those are really important, and that's how you get the information you need to file your forms 1099 NEC and or 1099 MISC. For backup withholding, if you are required to withhold backup federal income tax because the independent contractor did not provide you with a W-9, that percentage is 24%. So we have statutory employees versus statutory non-employees. So statutory employees are workers who, while they are not employees under the common law test, are treated as employees for certain employment tax purposes. So payments made to statutory employees are not subject to federal income tax withholding, but are subject to Social Security and Medicare tax. And the employer must also pay its fair share of Social Security and Medicare tax, as well as FUTA, if applicable. So some common statutory employees are agent drivers or commission drivers, full-time life insurance salespersons, home workers, or traveling city salespersons. General requirements: they must agree with the employees that all services are to be performed personally by the worker. They must not make a substantial investment in business, equipment, or facilities other than transportation, and their work must be part of a continuing relationship with the employer rather than a single transaction. So that's what makes them different than an independent contractor. Statutory non-employees qualify as employees under the federal common law test, but are treated under the IRC Internal Revenue Code as independent contractors. Earnings of statutory non-employees are not subject to federal income tax nor Social Security or Medicare, including FUTA on the employer's side, so long as there are certain requirements that are met. So there's two categories of statutory non-employees: qualified real estate agents, and direct sellers. General requirements that have to be met in order for you to have a statutory non-employee: most of their compensation must be directly related to the sales or other work output rather than the number of hours worked. So in other words, if they put in 10 hours, that shouldn't matter. It should be what was produced at the end of those 10 hours. It's not the amount of hours worked that should be, that their compensation should be based off of. And the second thing is their work must be performed under a written contract providing that the individual will not be treated as an employee for federal income tax, Social Security, Medicare, or FUTA purposes. Because payments made to statutory non-employees are not subject to federal income tax, Social Security, and Medicare, the payments are not reported on a W-2, but should be reported on a Form 1099 NEC, Box 1, which is non-employee compensation. All right, like I said, moving on quickly as we have a lot to get through. New hire reporting is super important. Requirements of new hire reporting: name, address, Social Security number are the standard ones. You also, as the employer, need to report your name, address, and your FEIN. The first date services were performed is also important. Some states require more information, and birth date is very common and becoming more common. For those of us sitting here in Colorado, that is a requirement now for new hire reporting, is the birth date. So if a employee is terminated and rehired, they must be reported as a new hire if they've been separated from employment for at least 60 consecutive days. There is also an option that the IRS put together for multi-state employers. They can report all of their new hires to one specific state. You do have to sign up to be able to do that. So that is really beneficial if you're an employer that has many, many, many employees in different states. 20 days is your timeline. So you must report your new hire within 20 calendar days of hires. And again, we already talked about E-Verify and the SSNVS, or Social Security Number Verification Service. Those are always encouraged to do on your new hires to make sure that their Social Security numbers are correct. So real quickly, pop quiz, real quickly, I know it's a lot. Reminder from Manon so we can make sure everybody's participating. Oh, I forgot to tell you to put your name in for attendance. Sorry. So in the chat, go ahead and put your name in for attendance, and then go ahead and we're going to answer these questions. And like I say, we'll go through them pretty quickly because we are on a time constraint, so we'll kind of do them together. So number one, what taxes, if any, must be withheld from an employee's pay? And again, this is from an employee's pay. And this is what taxes must be withheld. So this is kind of a tricky question. It's not really a tricky question, but it's kind of a tricky question. Which taxes must be withheld? So I see some A's and I see some C's, and I would agree with A or C, depending on how you look at it. So federal income tax, if the employee is claiming exempt, then you don't really have to withhold anything, but you do have to make sure you make that calculation. So great answer. I could see how that could have been answered either way, because Social Security and Medicare, you are correct, are the only two that you actually have to withhold, depending on how the employee is filing for federal. Okay. Oh, I'm too fast. What taxes, if any, must be withheld from an independent contractor who provides you with a taxpayer identification number, which is either their Social Security number or their EIN, depending on how they're filing. I see lots of D's. I would agree, they're independent contractors, you're not withholding taxes. Good job. Who has the responsibility to determine if a worker is an employee or an independent contractor? This is from yesterday. So whose responsibility is it to make that determination? I see lots of A's. Good job, guys. It is the employer's responsibility to make that determination. A receptionist has agreed to work afternoons at the company until the company can find a full-time replacement. What is the receptionist's status? So they want to know, is this person an independent contractor or an employee? If they're an independent contractor, would it be common law or a reasonable basis test? I see lots of C's. You guys are awesome. That person is an employee. Absolutely. Prior to beginning work for a company, a chemical engineer signed a contract stating that she agreed to work as an independent contractor. She performs all her duties in the company's laboratories, where she has full access to the company's testing equipment. She works under the company's direction and maintains regular office hours. What is her status? This one, again, they tried to trick you up. That first sentence that says prior to beginning work for a company, a chemical engineer signed a contract stating that she agreed to work as an independent contractor. They're just trying to mess you up. The next piece of that completely says that that person is an employee, not an independent contractor. So even though she signed a contract that says I'm going to work as an independent contractor, if that employer treats her as an independent contractor, they're going to be in trouble. So she is an employee. Good job. Last one. A retired safety inspector for the company was rehired as a consultant when the company expanded its plant operations. The retired employee was a natural choice. The tasks he undertook as a consultant were the same ones that he performed before retirement. He's paid monthly. He has agreed to work under the direction of his old boss until the new plant facilities are fully operational. Is this guy an independent contractor or an employee? I agree with you, Katie. I think that person is an employee. He's being directed by all of his old boss. He's doing all of his old stuff when he was treated as an employee. Just because he's retired and has agreed to come back doesn't make him an independent contractor. Okay. Good job, guys. Again, sorry for rushing so much. This was a long section. I didn't really realize it. The Fair Labor Standards Act is the next topic of interest. So FLSA, it guarantees employees a minimum wage. It requires employers to pay overtime premium. It limits when minors can work, and it provides equal pay protection. The FLSA is administered by the Wage and Hour Division of the US. I guarantee that is a question I had on my CPP exam. Who is responsible for administering FLSA? So the tricky part about FLSA is it is at the federal level, but states can be more specific. So anybody know the federal minimum wage? If you don't, I'm going to tell it to you here in a few slides, but it is $7.25. But a lot of states have higher minimum wages. And so what gets tricky is a state can be more strict, but they can't be less strict. So if a state says, nope, minimum wage is $8, then you as the employer have to make sure that you're giving the employee the highest benefit, which means that you have to pay them $8, not just the federal standard minimum wage of $7.25. The FLSA does not require any sick, vacation, jury duty leave, holidays, lunch, or coffee breaks. It does not regulate how often employees can be paid or should be paid. It does not restrict hours of employees that are 16 years of age or over. And most of those items are all regulated by state laws. So, for example, Colorado has some laws that say you have to give your employees at least a 10-minute break for every 2 hours of work. You have to give them at least a 30-minute uninterrupted lunch. All of those types of things are regulated by the state, not by the federal FLSA. Okay. So we have non-exempt employees and we have exempt employees. So not all employees are covered by FLSA. Exempt employees are exempt from FLSA, just like their name implies. Non-exempt they are protected by FLSA. So if you are non-exempt, You must be paid a minimum wage for all the hours that you worked, and you must be paid an overtime premium for hours worked over 40 in a work week. That is the federal requirement. Again, many states have more strict requirements than that. For example, Colorado, it's over 12 in a day as well as 40 in a week. So if I work 13 hours today, I get paid an hour of overtime because it was more than 12 in a day, even though I took 3 days off this week and was enjoying Alaska. So that means I won't put myself over 40 in the week, but if I do work 13 hours today, I still get an hour of overtime because it's over 12. On the other hand, if you are exempt, you do not have to have a be paid minimum wage, and you do not have to be paid overtime. In most cases, these people are paid a set salary. They're not protected, like I said, by the FLSA, and the employer does not have to keep as many work records as they do for their employees, their hourly employees. So they don't have to keep a record of how much time the exempt employees worked and all of that stuff. I do want to point out really quickly that we talk about work week, and we'll talk about that more here in a moment. But the work week is important, and it's important that it's a set standard 7 days in a row, and that your employees are aware when your work week starts and when your work week ends. Most common work weeks, I'm going to say, are going to be Monday through Sunday or Sunday through Saturday. Some employers do some weird things. We have a couple that start on Saturdays. They go Saturday to Friday, things like that. There's different reasons for doing that. But most common, I'm going to say, is probably Monday through Sunday or Sunday through Saturday. So there are, like I said, people who are exempt. In order to be exempt from FLSA, you have to fall into specific categories. These categories are pretty in-depth, and I'm not going to read every single one of them, like I said, because we're short on time, but Manon did provide you with the PowerPoint. I would make sure that you do read these. So put a star next to them, highlight them, however you need to remember. But it's important that you know these categories of employees and why they are able to be classified as exempt. And it has to do with their duties, their responsibilities, and their level of authority. So one of the exemptions is going to be for executives. These people manage people, they direct people, they have hire and firing authority, and they do have to be paid a minimum weekly salary of $684 a year. Again, that's a federal requirement. Some states have higher requirements. Another exemption reason that someone could be exempt is an administrative employee. These people, they perform mostly office work or work related to management or general business operations. An example, administration of a school system. So those types of people, team leaders, financial claims adjusters, financial services, HR people, things like that. So we have professionals that can be exempt, and there's 2 different categories. There's learned professionals and there's creative professionals. So learned professionals are people that have advanced or specialized information in their field of study. And then creative professionals their primary duty involves the use of originality and creativity. I am not that person, not creative. So people that are examples of learned professionals: nurses, they have special training to be a nurse. Accountants, you have to have a CPA to be an accountant. Chefs, they have special training to be a chefs. Athletic trainers, funeral directors, things like that. Creative professionals, actors, painters, cartoonists, journalists, things like that. So they can be exempt based on their professional level. They also have to be paid that minimum of $684 per week, unless, of course, you're a teacher. You don't have to be paid that much. Used to be a teacher too. So teachers, engineers, and attorneys are examples of professional employees. But like I say, they don't all have to be paid that $684 a week. Computer programmers are also a special category of people that can be exempt from FLSA. And they do have that $684 a week threshold, but it can also be paid at an hourly rate of $27.63. So the computer professional one is one that they kind of pull out into a different category. So keep that in mind, but it has to be like a computer software programmer. It's not just a computer repairman, which you might remember for a question that I ask you later. Hint, hint. Another exemption is outside salespeople. So they, in order to be exempt though, they have to be customarily engaged in selling or getting orders for the company's product or service, and they work away from the employer's premises. So they're not sitting in an office every day in the building, they're out selling. There do exist taxi cab drivers, motor and rail carrier workers, agricultural workers, hospital and nursing home care workers, home companion workers, and then public sector employees, firefighters, police officers, and others. There's special rules for them. Highly compensated employees, and I would remember, put a star by this number because I do know that I was asked this question on my CPP, and that is the limit, or what makes an employee highly compensated in terms of being able to be an exempt salary employee. And that number as of right now is $107,432 per year. Again, there's a ton more information on these slides. Please, please, please feel free to open or to read them up after class. You guys are capable of reading them, and we have a ton to get through, so I'm skimming a little bit. So we talked about minimum wage. Federal minimum wage is $7.25. That went in effect back in 2009 and has not since been updated. So it's been $7.25 for a while. On the other hand, federal government contractors, they have to be paid a minimum wage of $15 per hour. This was raised earlier this year in 2021. So here's my spiel about the work week. Like I said, it must include 7 consecutive days or 7 consecutive 24-hour periods. It may be different from different employees, different groups of employees. And it doesn't have to start necessarily at midnight. So you could, I've never really seen anybody do it, but you could say that your workday starts at 10 a.m. on Tuesday. And then that's when your work week would start, and then it would end at 9:59 on Tuesday of the next week. Again, federal contractors have to be paid $15 an hour. We already talked about that. Okay, so states, like I said, have different, or can have more strict laws for minimum wage. There are many states that have higher minimum wage requirements than the federal minimum wage of $7.25. Colorado is one of them. We're up to what, $12.32 these days. Things that can be included in minimum wage calculations are taxes and other withholdings. So in other words, you pay your employees a certain amount and then taxes are withheld from that. You calculate minimum wage before those taxes are withheld. So those tax amounts are included in the minimum wage calculation. The cost and maintenance of required uniforms. Now, it's important that you understand that this only applies if your uniform is required and it cannot be used as regular street clothing. So not that it works, but my husband is a firefighter, and of course he has to wear bunker gear if he goes and fights a fire. You can't wear bunker gear as street clothing. So if he fell under FLSA, he does not because he's a firefighter, but if he did, they would have to pay for his maintenance of his uniform if he was not making minimum wage. Room, board, and other facilities may be used to bring an employee's cash wages to minimum wage if the employee benefits from facilities and accepts them voluntarily. So in other words, they can't be required to live at your business in order for you to use this to make them get up to minimum wage. The facilities have to be supplied regularly, so they can't be supplied one week and taken away the next. And they must benefit the employee, not the employer. So in other words, if it's a benefit to your employer for you to live on their premises, then it's not, you can't treat that as cash wage to them to make them up to minimum wage. And it can only be a reasonable cost. They can't charge you rent that's way too high to, you know, in lieu of paying you minimum wage. Tips are a whole nother beast. So again, the federal minimum wage is $7.25 per hour. The tip credit federally is $5.12, which means the tipped minimum wage is $2.13 per hour. So if you work in a restaurant or somewhere where you earn tips, and you do have to earn a minimum of $30 per month in tips, I can tell you right now that was a question on my CPP, is how much per month do you have to be paid? And it's a minimum of $30 per tip per month to be able to be paid the tipped minimum wage. And like I say, we're going to go into many calculations of these tips and the tip credits and all of that in next week's presentation, because next week's about calculations of pay. If an employee is working as a tipped employee and they do not earn enough in tips to make them up to federal minimum wage, then the employer should supplement their wage to make sure that they're making at least the minimum wage, which if we're only talking at the federal level, that's $7.25 per hour. If you're in a state that has a higher minimum wage than that, though, you do have to make up the difference to the actual state minimum wage. Okay. So here's a quick example. Like I said, I'm not going to go into a lot of detail just because we don't have a lot of time. But if you had an example of an employee who was working as a tipped employee, they worked 30 hours and we're paying them tipped minimum wage. And the reason we can pay them tipped minimum wage is because they made $80 in tips. That's over the 30 in a month. So we can pay them tipped minimum wage as long as they made enough. So let's see if they made enough. So if we do 30 hours times 213, we get $63.90. They earned 80 hours in tips. Add those two together, we get $143.90. That's what they made for that work week. If we take that and we divide it by 30, because that's how many hours they worked, we get that they made $4.80 an hour. Is that enough for minimum wage? Probably not. So if we took our minimum wage at $7.25 and we multiplied it by 30, and then we subtracted what they did make, which was the $143.90, we have a leftover amount of $73.60. So that additional amount must be paid to the employee in order to get them up to that minimum wage. So if you look at that a little bit backwards, you take what they made and you add in that additional amount of $73.60, gets you to $217.50. And if you divide that by 30 hours, you do get $7.25 for the federal minimum wage. So again, I'm not going to go into super detail on those calculations today. We'll do more of that next week. Some states don't allow you to use tip credits. Like I say, states can be more strict, can't be less strict. So feds say, yeah, you can pay tipped. But if a state says, no, you can't, then you as the employer, if you have employees that work in that state, you have to give them the more beneficial law, which is going to be the state law in that case. So if a state has a minimum hourly wage of $8 and the maximum tip credit is 35%, then the net minimum wage that must be paid is as follows. So we look at federal minimum wage is $7.25, the tip credit is $5.12, and the net minimum wage then for a tipped employee would be $2.13. We've already talked about that. In this example, our state minimum wage is $8. Their maximum tip credit is 35%. So $8 times 35% is $2.80, which means that their tipped minimum wage in that state is $5.20 per hour instead of $2.13. So again, the big thing is states can be more strict than Fed, but not less strict than Fed. Regular earnings. So it's important that we know how to calculate regular earnings so that we know how to calculate overtime. And in the examples we just talked about, to know how to calculate to make sure that the employee earned enough to make minimum wage. So a regular rate of pay, in order to calculate that, we're going to do the total amount of regular pay, and then we're going to divide that by the total number of hours worked. So in our last example, or 2 examples ago, I guess it was, we had an employee that worked 30 hours. They made $2.13 an hour, but they also made $80 in tips. So the $2.13 an hour plus the $80 in tips, we're going to add those together, divide it by 30 to get our regular rate of pay. All right, regular rate of pay can get complicated if there's other things involved. For example, shift premiums. Some employers pay you for working the quote unquote non-fun shifts. So maybe a graveyard shift or so, you know, the non-desirable shift or even a split shift. They have to pay you, or not have to, but they do pay you more to entice people to work those shifts because they're not as desirable. If that is the case, then those shift differentials may have to be included in your regular rate of pay to determine your overtime rate of pay. And again, we will go into it in much more detail next week when we do the calculations of pay. This is just kind of an overview. Bonuses. There's a couple different kinds of bonuses. There are non-discretionary bonuses and there are discretionary bonuses. Non-discretionary bonuses are, just as they say, they're non-discretionary, meaning nobody had the discretion whether or not this bonus was going to be given. It was contractual or agreed upon that the employee was going to earn this bonus. If that's the case, that bonus must be included in their regular rate of pay for the time period for which that bonus was given. If, on the other hand, your employer is giving you a discretionary bonus, meaning they're just giving you $100 just because they're being nice, that doesn't necessarily have to be included in your regular rate of pay. So people need to be a little bit careful when they're calculating regular rates of pay to determine what needs to go into them. Things that are not included are gifts. If you're given a gift, it's not included in your regular rate of pay. Reimbursed expenses. So if you go to the store and you buy notebooks and your employer reimburses you for it, you're not going to get, it's not included in rate of pay. Stock options, bona fide meal periods, benefits or perks, things like gym access, or if you have an employee discount program or an EAP, an employee assistance program, things like that, they're not included in regular rate of pay. Show up pay, callback pay, those are not necessarily included in regular rate of pay. Overtime premiums are not included. Reason being, that's the premium piece that you get for working over 80 hours in a week, or depending on your state, could be more strict than that. And then other premium pay, some employers pay employees a higher rate for working on holidays, things like that. Massachusetts has the Sunday premium. If you work in Massachusetts on a Sunday, you have to be paid what they call the Sunday premium, which is actually being decreased as the years go and eventually is going to go away. I think right now it's 1.2% of your regular rate of pay that you have to be paid for working on a Sunday. So those types of things, the premium piece of it is not included in your regular rate of pay. We already talked about most of these non-discretionary bonuses are just that, non-discretionary. It's agreed upon, the employee is expecting it for a certain period of time. Discretionary bonuses are not agreed upon. It's just a random, for whatever reason, somebody's giving you a bonus. Those two things are different and have to be treated differently in terms of regular rate of pay. Overtime in excess of requirements. So for example, sometimes an employer pays their employees double time for certain things. That is in excess of a regular overtime requirement. And so those types of things do not have to be included in regular rates of pay, and they can be included to make sure that you are being paid enough per the FLSA. And we'll look at a couple examples of those. Benefit plans do not have to be included in regular rate of pay. And then retroactive pay does have to be included in regular rate of pay. So in other words, if you got a raise and for whatever reason it was supposed to be started 2 months ago, you do have to go back and recalculate regular rate of pay for that time period, and any overtime that was worked during that period, you're going to have to recalculate that and give the employee the difference of what you owe them. So retroactive pay, my advice to you is to start those raises when they're applicable. That way you don't have to go back and recalculate, because it can be a pain. But I know that doesn't always happen. So again, a quick example. So this person's working $10 an hour. They work week is Sunday through Saturday. Normally this person does not work weekends, but when they're required to pay, or when he was required to work on a Sunday, his employer paid him double time. So that was nice of his employer, not required by FLSA, but it was super nice of his employer. So FLSA says that he had to get paid 1 hour of overtime because he worked 41 hours in the week. So Per FLSA, if we do the calculation, he gets $415 for the work week. Mo's employer, though, he's nice, and he paid the employee $450, and the $450 is larger than what he was required to be paid per FLSA. So his employer did the employee right and is good to go. He's not going to get in trouble from the Department of Labor for not adhering to the FLSA. So that's what they talk about when they say that if you pay above and beyond the overtime premium, so this double time is above and beyond that 1.5%, it's actually 200% of his hourly wage, and thus the employee is getting a higher benefit. All right, pop quiz. Again, throw some answers into the chat so we can prove that you guys are paying attention. We'll go through these pretty quick together again. What are exempt employees exempt from? Minimum wage, overtime, minimum wage and overtime, or pay for time off? I see lots of C's, and I would agree with you. All of the following types of employees are classified as exempt from FLSA and over minimum wage and overtime, except, so we have professional, outside salesperson, administrative, or a computer repairman. Hint, 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 this was the one that I cheated for you earlier. Computer repairman is not a computer software specialist, therefore he's not exempt. Good job. Waitress is paid $2.25 per hour and she receives $225 in tips during the week. She works 40 hours per week. Which of the following is true? Her employer is allowed to reduce her cash wage to no less than $2.13 per hour. Her base pay must be increased to $4.25 per hour after a 90-day training period. She must be paid $5.12 per hour by her employee or her employer, or her base salary must be raised to $3 per hour to comply with federal minimum wage. This is one of those fun questions that many of the answers just don't even make sense. So basically the answer is A. They can reduce her wage to $2.13 an hour. Reason being she made $225 in tips. So she's way over that 30. And if you do the calculation, she's going to be over the federal minimum wage of $7.25 an hour. If a state sets minimum wage at a rate greater than federal minimum wage, the state minimum wage must be paid. Is that true or false? True. Good job. We always, oh, I marked the wrong one, sorry. I did those backwards apparently. That is true for sure. You guys got it. A non-exempt employee works in a state with minimum wage of $7.35 while living in a state with a minimum wage of $8.05. Do we care where they live or do we care where they work? We care where they work. So the answer on that one's going to be B. Good job. Tips can be counted toward an employee's minimum wage. True, false? True, you guys rock. An employee works 40 hours per week as a fry cook. During the week, she substitutes for one of the waitresses and reports $5 per week. Can her employee pay her $2.13? No, why not? It's the $30 in tips thing. They can't, she only made $5. You don't get to pay her $2.13 for making $5 in tips. Okay. Can she still earn the $5 in tips? Sure, that's not a problem, but you can't pay her $2.13. So employers who provide paid vacation leave must count hours of paid time off when determining if the employee must receive an overtime premium. The answer to that is false. Paid time off does not have to count toward overtime. Reason being, overtime is only calculated on hours worked. So again, I was in Alaska Monday and Tuesday of this week, and Wednesday, well, kind of, I was traveling on Wednesday, but I was not working. So my vacation hours do not count toward my 40 hours this week. FLSA requires immediate payment of employees' final paycheck upon termination. Is that true or false? You guys are amazing. It is false. FLSA does not care. Who does care? The states care. So the states are the ones that are making those determinations, and every state is different. That's why this CPP exam, and these presentations are generic because we don't have time to tell you about every state's different laws. So we've already talked about the work week a bunch, so I'm not going to go into that. The one thing is that you can have different work weeks for different sets of employees should you choose. There may be a reason that you wanted to do that within your organization. It does make it difficult if you switch your work week. So if you can avoid switching your work week, be consistent, it'll make your life a lot easier. Like I said, it gets complicated if you switch the work week, and I'm not going to go into super big detail on this, but what you have to do is you have to calculate twice, basically. If you switch your work week, you have to calculate what the employee would have earned on an old work week. You have to calculate what they would have earned on a new work week. You have to figure out what's more beneficial to the employee when paying out that work week where you make the change. So again, it's always important to make sure that your employees are the ones receiving the bigger benefit. So if changing your work week is going to hurt them, meaning they would have gotten more on the old work week, you have to pay them that more amount, and you can still switch your work week, but you just have to be aware and make sure that you pay them the appropriate amount for that one time where you change your work week. So just be a little careful of that. And if you can avoid it, I would recommend avoiding it. So the 8 and 80 rule is specific for hospitals and nursing homes, but it is an exception to the normal 40-hour overtime rule in a work week. And what it says is that employees can change, and it has to be agreed on by the employees and the employer. And what that means is that they calculate their overtime based off of a 14-day period. And so they would only get overtime if they worked over 80 hours in that 14-day work period or over 8 in a day. So as a quick example of that, Jack, who's a non-exempt hospital employee, has agreed to work on a 14-day work basis. He's a hospital employee, so that's important. You can't do this 8 and 80 thing if you're not a hospital or a nursing home employee. His regular rate of pay is $12 an hour. He works 5 days at 8 hours and 4 days at 10 hours each. So if we take a look at that, he worked a total of 80 hours. He worked over 8 hours in a day for 4 of those days. He worked 10 hours on those 4 days. So that's 8 hours of over 8 in a day that he worked during that time period. If we look at his total earnings of 80 hours times 12 hours and $12 an hour, he gets $960. Divide that by 80 hours to get his regular rate of pay. Again, we're back to 12. His overtime premium rate is going to be half of his normal rate. So his overtime premium, and again, that's just the premium piece of the overtime rate, is $6 an hour. So he gets an extra $6 an hour for 8 of the hours that he worked, because 8 of those hours were over 8 in a day. And so his total earnings is going to be the $960 plus the 48, giving him $1,008 for that 2-week pay period. Again, this rule is only for hospitals and nursing homes. I do know that there was a question on this on my CPP exam. So if you're taking it, make a note. Interns. So FLSA defines the term employee as to suffer or permit to work. So interns, sometimes it can be confusing on whether or not an intern should be paid or not. But according to FLSA, if you're an employee, you are permitted to work, or you're suffering to work. So in order to not pay an intern is really the easier way to look at it. They have to meet several criteria, and all of them have to be met in order for that to happen. So those 6 pieces of criteria are that the internship, even though it's at the facility of the employer, it's similar to training that would be given in an educational environment. So that's one thing. The intern experience has to be for the benefit of the intern, not for the benefit of the employer. The intern does not displace a regular employee. So in other words, if a regular employee leaves and you hire an intern in their place, you don't get to not pay that intern. That's unfortunately not the way that works. The employer derives no immediate advantage from the activities of the intern, and on occasion it may have its business impacted by the fact that they have this intern working for them. The intern is not necessarily entitled to a job at the end of the internship, and the intern and the employer have an understanding that the intern is not entitled to wages for the time spent in the internship. So it's a little tricky. You got to be careful, make sure that all of those things were going to be met if you're going to have an intern and you're going to try to not pay them. Fluctuating work weeks, you can have them. There are many variations of a fluctuating work week. So for example, fluctuating work week plans require that an employee's work schedule vary so that neither the employee nor the employer can anticipate the schedule from week to week. The employee's salary must be a fixed amount, but must not fall below the current minimum wage. And when considering the number of hours the employee works each week. So if you have a fluctuating work week and you have an employee that's on this, they're generally non-exempt employees, but they're on a fluctuating work week. So you don't know how many hours they are going to work on a regular basis. So the courts have ruled that fluctuating work week can be used when the employee is paid a performance-based commission in addition to their fixed salary. They are paid for overtime and hours worked over 40 hours in a single week, and their fixed salary, weekly salary, is high enough to ensure that when the employee work a large number of hours, that their pay rate does not fall below the minimum wage. So for example, George, who's non-exempt employee, is at he's being paid a fixed salary of $400 per week, and he works between 35 and 50 hours each week. Last week, he worked 47 hours. So his regular rate of pay is $400 divided by 47. His overtime premium, if we multiply his regular rate by 0.5, we get $426. He worked 7 hours in excess of 40, which is $29.82. So he's going to get a total of $429.82 for that work. Comp time. A lot of employers, I think, would like to pay comp time, but they're not allowed to. So generally in the private sector, you're not allowed to give comp time in lieu of overtime. The exception to that is if it's within the same period of the same work period, and it is given at 1.5. So in other words, if I work an hour extra today, and my employer doesn't want to pay me an hour of overtime, they could give me an hour and a half off tomorrow as long as my work week or my pay period goes through tomorrow. So it has to be contained within the same pay period. In the public sector, on the other hand, you can use comp time. We don't see it as much because it's mostly local or state governments, and they can give comp time if the employee and the employer agree. It can be taken within a reasonable time frame, and it's paid out upon termination, so they can't not pay it to you. And then there is some maximum limits on these, that you can't have an excess of comp time. Like I say, we don't see this too often, but it does happen once in a while. I told you there was exceptions for firefighters and police officers. They don't have to be paid overtime like normal people. My husband is a firefighter, and he does not get paid overtime unless he works more than 108 hours in a 2-week time period. So poor guy. No. So anyways, I don't remember having a specific question on this in terms of how much they could work, but I do remember having a question about them being exempt from the normal overtime FLSA rules. We've talked a lot about overtime. We'll talk more about it next week. So I'm gonna jump through that. We only have 10 minutes left. Oh my gosh, I've talked a lot. We're going to talk about this next week too, but if you have an employee that's working and they make multiple rates, and we already kind of talked about it with the shift differential idea. So if you are paying your employee, if they do work at a certain time of day and they get more money for that work, or if they do a certain task and you pay them more to do that different task, then you are going to calculate what you call a weighted or an average overtime when you do their overtime instead of just their straight time times 1.5, because there's not a consistent rate. So we'll talk about that and we'll go into more calculations next week. Piece workers, again, we'll look at some examples next week, but calculating overtime for piece workers, it all comes down to the same thing. You're going to calculate their regular rate of pay, and then you're going to calculate their overtime pay. But we'll do some more examples next week. All right, pop quiz. FLSA requires that time worked on Sunday be paid at overtime rates, and time worked on Saturday be paid at overtime rates, and time worked on Sunday be paid at double time. Per FLSA, is that true or false? I'm seeing lots of falses and no's. You guys are awesome. If state wage and hour law requires that a non-exempt employee be paid an overtime premium when the employee works more than 8 hours in a day and the employee works the following schedule, how many overtime hours must the employee be paid? This question's a little tricky. They worked, and I have a calculator here, so I'm going to do math real quick. 5 plus 7 plus 6 plus 8 plus 10 plus 8 plus 6. They worked a total of 50 hours for the whole week. And they worked on Thursday, they worked more than 8 hours in a day, but they worked 50 for the whole week. So how many hours of overtime do we have to give them? You guys are awesome. C, 10 hours. Last week, a high school teacher spent 40 hours in the classroom and worked 10 hours grading papers and was required to put in another 8 hours on Saturday for a school-sponsored science event. Under FLSA, how many overtime hours must the teacher be paid? You guys are amazing. Teachers don't get time and a half at all, ever. So no overtime for them. An employer pays semi-monthly on the 15th and last day of each month. The work week is Sunday through Saturday. Memorial Day is May 31st. A non-exempt employee works the following hours. And the question is, how many hours of overtime, if any, did the employee work during this pay period? So that first week, I see 5 days at 8 hours, no overtime there. The second week, I see 1 day where they worked 10. The next they worked 4, so they're still under 40 for the week, so nothing there. And 8 and 12 that last week, so I don't think that person gets any overtime. Gosh, we're mean, not giving people overtime.
In Pennsylvania, we give it over 8 in a day.
Do you?
Mm-hmm.
Yeah, in Alaska they do too.
Yeah, over 8 in a day and over 40.
That was Pennsylvania. Man. Oh. During Thanksgiving week, a non-exempt employee was paid for the following hours: 10 hours on Monday, 10 hours on Tuesday, 8 hours of sick on Wednesday, 8 hours of holiday on Thursday, 8 hours of vacation on Friday, and 8 hours of work on Saturday. Did that person get any overtime? No overtime, agreed. Unless you were in Pennsylvania, and then you would have got 2 for Monday. When must overtime be paid? Do you have to pay it every week with the next payroll or as soon as practically possible? You just have to pay it with the next payroll. You guys are awesome. A non-exempt employee working at a hospital can work more than 40 hours in a week and not be paid overtime. They are working at a hospital, so we can apply the 8 and 80 rule. And yes, you guys are awesome. You can work more than 40 in a week and not be paid overtime. Specific to hospital and nursing homes though, so be careful. Rounding, some employers love to round, and the wage and hour division has accepted certain types of rounding to the nearest 10th, which would be to the nearest 6 minutes, or the nearest quarter of an hour, and the practice must be used consistently, because if you use it consistently in theory, it's going to work out in the end. I know we, as a payroll service bureau, recommend that you do real time. Get a timekeeping system, do real time. If they clock in at 8:01, don't pay them from 8 o'clock. If they clock in at 8:07, just use real time. Worked hours. So one thing that you want to be careful of is you want to make sure that the employee is working when they're supposed to be working. So there are certain times they're sometimes at the office, but not necessarily working. Clocking in and out, they don't consider that worked time. That's your time to be done. Now, For example, my husband, like I said, he's a firefighter. They have to pay him to put on his gear to go fight a fire because he has to have that gear to be able to do the job. If it's something that doesn't have to be worn to do the job, though, you don't have to pay for donning and doffing your gear and things like that. Meal periods and rest periods most often do not have to be paid unless your state has a stricter law. On call and waiting time, the FLSA do not have any laws on that, but you have to be careful and make sure that, I shouldn't say the FLSA doesn't have any laws against it. You have to pay them if you are limiting what they can do. So in other words, if you're making them sit at your facility and wait for somebody to call them, then they're not able to live their life. But if they're at home and they can live their life, they can do their laundry, they can mow their yard, but if somebody calls, then they have to go out, then those are two different scenarios. And you do have to be paid if you are what they called engaged to be waiting instead of waiting to be engaged. So anyways, trainings and travel time and things like that, it depends on the training. If the training is required for your job, then you have to be paid for it. If it's voluntary and your employees are going outside of normal working hours, it's not directly job related, but it might benefit them, but it's their choice to go. You don't necessarily have to pay them for that. Be careful with state laws as they could be more strict than that. Travel time is an interesting one. We don't get paid to drive to and from work, but we do get paid if we travel to, say, a conference or something, depending on the travel. The FLSA is less strict than Colorado. For example, Colorado just adopted a new law that you do have to pay for travel time. The FLSA, though, says you don't have to pay for travel time unless it's during the normal work week time. So if I travel on a Sunday and I don't normally work on a Sunday, FLSA says I don't have to get paid. But most states have more strict laws than that. So you want to be careful on that one. I'm really running out of time. I already talked about clothes. Child labor, you can't work children, crazy. FMLA is applicable to employers that are over 50 employees. You have to give employees up to 12 weeks of leave should they require it. And you can't make them lose their job. You have to bring them in at the same level that they were at when they left or an equivalent level. So I would look over the acts, make sure that you're aware of them. I-9, we already talked about I-9s yesterday, so I'm not going to go into big depth on I-9s or W-4s. One thing, an SS5 is an application for a social security card. So if you have an employee that lost their social security card, they may have an SS5 that they have. But W-4s we talked about a ton yesterday. When they're invalid, who's exempt, talked about all of that yesterday. February 15th, that's the important date that we remember. If an employee is claiming exempt, they have to refile a new W-4 by February 15th. Otherwise, you have to bump that withholding back up. Lock-in letters, again, we talked about yesterday. W-4P is for pension. I always remember P for pension. I did get asked questions on those, both the W-4P and the W-4S on my CPP. These to me are pretty easy to remember because a W-4P is for pension and a W-4S is for sick pay. So that's all I have for you. Manon sent out the PowerPoint, I think she said. If you didn't get it or need it, just holler at one of us and we can get it to you, but I think she sent it out. And then I think Manon sent out the pre-test that we talked about yesterday. So take it, grade yourself, see how you did. Hopefully at the end of this, you'll know more. Anytime you guys have questions, feel free to give me a shout, shoot me an email, give me a call. I think you all have my contact information. I'm sure you're tired of listening to me blab for today, and we have gone over. So any questions? If not, have a great day, have a great Friday, and I will talk to you guys all next week.
All right, I have not sent out the pre-test, but I will do that today. I've also recorded both yesterday and today's sessions, and so those will be sent out with the pretest. So you'll get that this afternoon.
Awesome. Thank you, Manon.
Thank you, Melissa.
Thanks, guys. Have a good weekend.
Thanks.
Bye.
Bye, guys.
Bye.